actually, I think a lot of people are familiar with work, so it's usually let me just start saying it's it's recording, but I turned off the cameras. Um, right, this is just to record my yes, so that hear people. Then also I will share the link with you guys as well to share with friends who might benefit from watching this seminar. Okay. So yeah, so as I was saying, ETFs are generally common investment tool. So I think that might be one of the reasons why they have less people today, because um, there's so much information out there about ETFs, but there's still a lot of people who don't know how they're structured, how they work, how to pick one, and where to pick, right? So that's what we'll discuss today. And so at any point, if any of you have any questions, just raise your hand and ask the tech. And so this content is for educational purposes. So make sure that you do your research and speak to professionals when making investment decisions. So first, let's talk how the ETFs are created, right? So first, there is a issuer, the company that invests in companies. So for example, if we're talking an ETF on S&P 500. So what is S&P 500? So 500 biggest American companies that are listed in one stock exchange. Yes, they're just US. So this company takes 500 shares, right? So in all of those companies, and they issue, so they are the owners of the stock shares, but they create units in these funds, which is available on the secondary market, aka platforms, maybe savings plans, depending on where you are, but mostly it's stock market. So at the time in the 90s, when they just started, it was revolutionary, because before then, to buy a unit fund, index fund, you would have to go to a specific mutual fund company to and their managers to buy a unit, or go to the stock market or platform and buy stocks individually. But doing creating this ETFs, you don't need to buy 500 shares yourself. You can just buy one piece in one ETF, and it's easily traded, and therefore more available, and sometimes even more affordable, depending on which stock we're talking about. So, and we have, like on a normal market, right? So there's someone buying the units in an ETF, and there's someone who's selling it, and it's a free exchange in the secondary market, and so in that way they are more available to people, and then actually that started off a larger inflow of cash into the investments and ETFs. So they only started in the beginning of the 90s, but now there are trillions just flowing within just the ETFs. And so authorized participant is the company that issues these units, right, that are available for investors to buy or sell. So sometimes it happens that a certain industry is not doing well, so shares fall in price, and an ETF can choose to liquidate. And it's happening with the authorized participant who is buying the shares, and so they can decide to, okay, so it's not profitable anymore. They sell their own shares, they return whatever's the value of the units at the time, and that's it. So it's easier than these days for the investors and the authorized participants to start and close an ETF. Any questions about the structure? All right. So if we're talking about, say, an ETF, not only S&P 500, but let's say the tech industry, right? So if I wanted to invest in all the companies that do technology innovations or AI, so there are also AI ETFs. So in these companies that invest in stocks that are involved from companies that are involved in AI development. So instead of going to the market, so I want to buy, let's say, several shares of technology companies, but they might be very expensive. Like, for example, at the moment, Microsoft shares are more than $500. I might not have that money to just invest into one stock. So instead of going to the supermarket or market and buying one ingredient, which may or may not be affordable for me, an ETF gives me an option because they combine all of these ingredients. So if we're talking about AI, so it's NVIDIA, Microsoft, Meta, and then other companies that develop data centers, etc. So it's because we don't know which company will pop up again, like NVIDIA did in its time, or AMD, or other companies, right? We don't know which company will be the next hit. So with an ETF, all of these companies, all in one place, all of these stocks are blended into one. And when you buy one slice of pizza, you're partially investing in all of them. So let's say FTSE 100, it's 100 biggest UK companies. Buying one slice in an ETF that's linked to FTSE 100, you're investing in all those 100 companies. Or S&P 500 or NASDAQ, there are lots of indexes that are linked through ETFs, but then also industries, countries, like there are ETFs that follow emerging markets. And emerging markets is a very broad area because it could include India, China, Southeastern countries, African countries, Latin American countries. But some of those countries might fall out of the race, and then some other countries might, join the race. And because we don't know which one will be the next destination, so that ETF, if it follows just a broader range, they know. So they just check, they do the analysis, and there is a passive tracker that follows these areas, industries, etc. So, and actually there are quite a few very interesting ETFs. For example, a few years ago when marijuana was legalized in the US, there is an ETF that tracks companies that develop marijuana in the US and Canada. So these are companies that grow the weed, sell weed, package, store, so whatever it is around the industry. So that ETF follows all of them. And who knows, for the right investor, it could be a good ETF, a good investment. Right? So any questions about the structure? Good. All right. So there are a variety of ETFs that are available. And of course, the common one is the indices. So equity, stock markets like S&P 500, NASDAQ, FTSE, Nikkei, the Japanese one. There are also the Shanghai and Shenzhen, the China ones. They're called China Great A Share, and others, right? So if, for example, if you have a strong belief that Latin America will be the next big hit, there are also ETFs that follow that. Also in sectors like real estate, tech, whatever it may be. Then commodity. So also, especially this year, as some of you know, gold is just hitting all the records. And so of course, the ETFs that follow gold and silver are actually doing really well this year. And but also there are others following like agriculture, cocoa beans, coffee beans, orange pulp, whatever it is, right? So they just follow that. That's it. And then, yeah, sector and thematic. So for instance, we're talking a few years ago, before the pandemic, there was a big wave of green energy. So more people were choosing to invest in sustainability. And so, of course, they were going for ETFs that follow that, and healthcare and other industries. So you name the industry, most likely there are companies that are trying to develop and make money on that, and there is an ETF that follows them. And the international global ETFs, of course, the emerging markets, also very promising area, because we know that at this point, yeah, so there are big guys like US and Europe, but then also there are like the underdogs in the future development that might bring future more potential in the future. Okay, so when it comes to investing in ETFs, of course, the main goal, the main con is the diversification. Because if you're buying one unit, you are investing in just a bunch of different companies at the same time. So it saves you time as well, because if you don't have time to analyze and go balance sheet of a company to choose the next big hit, an ETF just saves you time in that regard. Then if we're talking companies like S&P 500, right? So if one of those companies fails from the 500 companies, another one just takes over. So that's something about these indices, because we don't know which company will be the big hit in the near future. But then, because for example, Nvidia is one of the Magnificent Seven, one of the seven biggest companies of S&P 500, but it wasn't like that until like 5-6 years ago. So that changes within the index, it changes that. And so going for a broader selection of companies gives you more diversification, because who knows how it will go. Next one, the accessibility. So for us, especially experts in China, the ETFs are available from platforms. Most of them are open. It depends on the nationality. Yes, so there are some platforms that are not available for certain nationalities or certain visas, because it depends what kind of visa you're on here. So if you're on a business visa or tourist visa, you cannot open one. Because it's not completely clear. So it depends on the residence. And then there are some that are not available in China. Like for example, a few years ago, Saxonite, so it used to work here in China, and it took expats that lived in China. But then last year, the operation, so they no longer service people who are living and working in China longer. Yes. Yeah. Nationality, and then what kind of residency. So for instance, if you, with the platforms that we work with, if you are here, but then, your income, so if you're not on a working visa, so where is your income coming from? So maybe it's the spouse, maybe you're on a spousal visa, maybe your husband is working. So, and therefore you might provide that from your income is coming from that. So most of these platforms around the world, they follow these very strict AML procedures, anti-money laundering, where it's required to confirm where your income coming from. And that is closely linked to how and why we're experiencing. Most of us are here. because of work. And if you don't have a job, then, or if you don't have any other means, you're out. Okay. But yeah, generally with ETFs, you just search for which ETF that you are interested in. Generally, there is a thing called ISIN, so it's an individual unique code for each ETF or a ticker. It's how it's traded, and you can find it. For example, the most famous one is S&P 500 ETF, called SPY. Or spider. So it's just you can go on Google and just put SPY. Yeah, the very first ETF linked to S&P 500 since 1990. Okay, so the liquidity is also another very important topic because they are easy to sell and easy to buy. So, and if, for example, you have invested in an ETF and then something comes up, you need the money, you can go on the platform. Yes, it might take still a couple of days to get the withdrawal back, but it's easier than, for example, if you are selling a stock and you want to sell it at a certain price. And it might take some time to sell it. Of course, these days it's all happening faster, but back in the day, just even selling stock, even through a broker, it might take some time because you will need to find someone to buy it from. So there's no middleman who will buy it and then they sell it to someone. And so, yeah, with ETFs through platforms, the liquidity on these ETFs is simpler and low cost. So most of ETFs, they trade, so that the service fee is generally under 0.5%. So compared to, say, actively managed funds, which can cost 2-3% a year, because they have someone service the funds, they have teams of analysts, so of course they are salary. So some of the gains are going towards their salary. But with ETFs, because they're passive, so it's essentially a bot or like a machine that tracks all of these companies. And so if, let's say, in S&P 500, we have one company that's dropped out, so that initiates a sell of that stock and purchase of the new company that entered the S&P 500. So, and because there are no human power involved with the ETFs, generally they're lower price. And typically when you're researching it online, you just go and then there is a service fee, a OMC or AMF, so annual management fee or ongoing service charge. It's all available on different sources, and I will mention later where you can go and research this. So of course, with cons, there are with pros, there are cons in investing in ETFs, and generally it's the volatility. So if we're talking S&P 500, so if any of you remember that when the tariff started, the S&P 500 fell in just a matter of days. And so what happens generally with the ETF, because it's a passive tracker, it doesn't make any decisions whether or not we'll stop the investment or we pull out or we do anything. So it's a passive tracker, it just goes where the index will go. So it will go as low as the index. But when things recover, it will follow as high as the index because it's passive. So, and with that in mind, of course, you need to think about how comfortable are you individually with that kind of possibility of the ETF just dropping, maybe half price, maybe more, maybe less. And so, and it's a lot to do with your own risk profile. It's very individual for different people. And of course, make sure that you don't invest everything into one ETF, because in that case you are fully dependent on how this ETF. So make sure you have different things in one portfolio, and you follow the news and see what's going on. So this April time, I had a lot of conversations with my clients, especially the ones who just recently started investing because they were worried. And but it passed, right? So only a couple of months already, by end of May, that turbulence passed, and the S&P 500 recovered to where it was at the beginning of the year, and then it started to grow higher, and it hit already historical records several times since June. But yeah, we don't know what's going to happen next. It might happen again, even maybe before end of year, that there's going to be something else happening, because generally we do have this spots in performance when stock markets fall, and that of course reflects on the ETFs. So over trading risk, that's also very common, because especially for those who are just beginning to invest, right? So for example, if I have $1,000, I want to start investing, and then I might put all the 1,000 that I have into one ETF, but then I'm not diversified because it's all just one ETF, where I might go into several ETFs. So one that's more, let's say, one part of that 1,000 goes for an S&P 500, another one maybe fixed interest, which is low volatility, low risk, yeah, low return, but it's more stable when things get shaky. And maybe somewhere else, right? Maybe tech companies or something else, right? So over trading, it's also very important to keep in mind, so that when you are starting to invest, start with smaller amounts and just split between several things. And I actually haven't heard anyone complain about the fact that you cannot pick individual holdings, but in theory, yes, there might be people who are not comfortable having like Tesla in their ETF, or maybe some other companies, because some of these companies might be related to things that you are not comfortable with. Maybe they're oil production or weapons or something like that, right? But with an ETF, you have no choice. So you just pick the one. There are ETFs where you can choose a specific ESG rated ETFs for sustainability, or there are also words like green, sustainable, ecology, etc., that you can choose. But the performance might not be as steady as, say, S&P 500. Okay. Any questions about those parts? Yeah, we see. Yes, generally in ETF. So depending on the ETF, so they might give you just the top 10 holdings. So at least you can see what's the majority of the money going into, because usually they will give you the percentage of how much of the money is held in stocks of a certain company. I think, yeah, right now with AI, tech, S&P 500, it's all the same names, right? The Metas, Google, and Nvidia. But if you're going with other ones, of course, you can take a look. And for example, iShares Global and SCI, which invest in more than 1,300 companies. There's a list where you can go page by page which companies that they invest in. So it depends on the ETF, but generally at least top 10. And also you can see what industries, what regions, and what they do, right? So for example, that's saying iShares Global MSCI, they invest in. The majority of it is in the US, under 60%, but it just so happens these companies that develop, grow, and trade their shares, they are just based in the US, but there are other areas, and then you can see that most of them is information technology, financials, fintech, maybe cyclical, and utilities like water, companies like Coca-Cola, Nestle. So these are consumer staples, and just different industries all in one. Yeah. All right. Okay. So next, how to access from China? Of course, I'm biased. I'm a financial advisor. I do recommend going with the advisor because, first of all, there is a conversation. What is your own risk profile and what would you be comfortable with? And in terms of the affordability, because along with just, I have $1,000, there is a conversation. What of that $1,000 should be my emergency fund? Is it included? Is it part of that? Or maybe I have some other expenses that I'm just not really remembering at the moment of the investment. So there are different factors that we need to weigh in before we go ahead and start investing. But all of that can be done by yourself as well. Actually, last year, summer, I did an AI webinar where I went through AI tools that you could use as well to do the fund. Some of what you could do with a financial advisor. So, and that includes understanding your risk profile. So you can just simply say to ChatGPT, I want to understand my risk profile. Ask me questions to determine what is my risk profile. And then it will ask you. And then you just reply as sincerely as you can, and it will tell you what's your risk profile. So in these days, there are lots of AI tools as well that I don't think that they would replace a human advisor, but they do help if you're doing it by yourself. And these two things are not mutually exclusive. So if you're working with an advisor, you can always open your own platform, or if you're doing a platform, you can always work with an advisor. And so from China, for expats, it depends on your background, right? So there are some platforms that are available based on your nationality, and some that are not. So of course, if you have, let's say, a working visa and your income is legal, most platforms will be open. So that's bad. North Korea, Syria, probably Afghanistan. But then again, it depends what they're doing. So if they are long-term residents working, probably they can. But it is different. So I also come from a different region, so I have Russian passport. So with some platforms, it's different, but there are the ones that work. Yeah, so it really depends. And so for DIY platforms that I know people in China use a lot, it's interactive brokers. So you can in fact register for your personal investments. And it's fairly invest, although the outlay of the whole website, I don't maybe it's just me. And then of course for us as an advisor, we also have some platforms where you have more control over what you're investing in, and you have the advisor to give you some kind of navigation what to invest in, and we have platforms where advisor has more control if you don't want to involve much. So there are several ways to go. And then also, I think there are so many groups. There's probably a group where, all Colombians are in and you can discuss, okay, oh, Colombianos, where are you investing? Or, and people will share what's available based on the nationality. Okay. So when we're picking an ETF, because there are so many, right? It's like picking a shopping mall that will sell you the quality product. And what you will need to do is check out who is providing it. So stick to big names, especially when you're just starting to invest. Companies like BlackRock, iShares is under BlackRock, Vanguard, Fidelity, etc. So pick the names that already ring a bell. So most likely some of you already have heard either iShares or BlackRock or Vanguard. And so when you're doing the research, just stick to the big names at the beginning. And then historical tracking error and alignment with your goals is tracking error is how closely it follows the index, if we're talking about index. And all of this information is generally provided on the website of either the company that's providing the ETF, or their website that gather that information for the users. For example, there's a website called Just ETF. And you can find a lot of information about an ETF there. So they gather the information and you can just look it up there. And and of course, alignment with your goals. So if, for example, you're investing to save for a house and you will need that money in like 5 years time, investing in crypto might not be a smart decision to go and invest. Maybe some of it, but not all of it, because we don't know how in the short term cryptocurrencies will go, and it's the same with other commodities, etc. So in that sense, we see what's your goal, and maybe it makes more sense to go with just investing in the index ETF. So and then when you're looking at expense ratio is the fees, the OCF and or AMC that I mentioned. So and generally they are also provided the information website. And also, so you can use Morningstar, or there's another one called FT, marketsft.com, so where you can also look up what kind of ETFs, do a comparison, and Morningstar and finance, Yahoo Finance. Market FT. Yeah, so marketsft.com. And you can just search funds, FT market information. And what Morningstar is, it is just a matter of which outlay you like better, which website works for you personally better than, let's say, Morningstar. But they generally provide the same information. Okay. Yes. So ETF.com, Yahoo Finance, and the So for me personally, I use either Morningstar or the Financial Times. So Yahoo Finance, something about the website is it doesn't work for me. But I know a lot of my colleagues Yahoo Finance rather than it. So it depends on the personal preference when it comes to the tools that you're using. Okay, and so long-term considerations. Of course, there are more things to consider when we're talking about long-term investments. And one of the main ones, of course, as your life goes, your situation changes, right? So people are single, married, kids, divorced, widowed, job changes, relocation, and all the time when there are some big changes happening in our lives, we need to look into our portfolio and make changes if that's necessary. Because, so for example, I'm young now, and so I might go into something like, yeah, ETF that invests in marijuana, for example, or space explorers, right? So because that's something adventurous, and I believe that that will grow time. But then over time, when I have children, my risk profile and my priorities will change, because at that point, I don't want to risk my savings. Because at that point, I want my money to grow, but not to risk something, not to risk. And so I will need to change and adjust my portfolio to my current situation. And for some people, it happens otherwise, right? So someone might start more conservative, more defensive at the beginning, but then they go more adventurous once they feel more confident about how the investment is going. And I see this a lot in my practice. So some people might start with something very conservative. They don't want to risk too much, but then they get comfortable with how the investments are going, and so they increase their risk. Another thing is the taxes. Also, very much depends where you are, what's your resident status, and remember that, for example, if you are not in the US, if you're investing in US assets, there might be still a withholding tax supply. So when you're investing, and if you don't have a US, if you're not a US national, it would make sense to go for ETFs or other assets that are not registered, so that you're not paying extra on prices. On the other hand, if you're a US citizen, you want to go with US assets because if you invest into something else, the tax is much higher on those. So it's also very individual and or passport situation. Also, when it comes to withdrawals, this is again, right? So you're investing maybe 10, 15 years, and then you start withdrawing at some point. If you are located in a country where they do pay taxes on your mobile income, then it's just take that. Here in China, as long as you are within the 6-year rule, no tax applied on your global income. However, if you did stay in China for 6 years and you leave for longer than 1 month, then the tax is applied to all your incomes, including one that's outside of China. Talking about other countries, for example, in Thailand, as long as you're a resident, all your global income is also taxed. There are ways around it, but generally, if you're a resident and you have income in Thailand and outside of Thailand, still pay. And it's the same for Americans and other nationalities. Okay, I think that's it for taxes and estate planning, because none of us live forever. And so that's something also important, especially when you're just starting to invest. Set beneficiaries as soon as possible. And if you have, let's say, I'm an expat, I live in China, I have some money here, but my investment platform is located, for example, in Hong Kong, and then I have property in, let's say, Bali, and I have some money somewhere in Europe. So I will need to, because it's 4 different jurisdictions, I will need different rules to make sure that my family gets what I have in the order that I want. So if you have a platform, with platforms, it's fairly simple because you can assign beneficiaries. And so if you pass away while holding that account, whoever you assign as beneficiaries will get that money. But if you don't, then your family might have to appeal to receive that money from you. So they might have to prove that they are in fact your relatives And so it's a long process, and depending where that's happening, it can be a very long time. So make sure that you set beneficiaries and you have those for each jurisdiction where you have assets, especially if it's, let's say, countries like Europe, uh, Asia depends. Like for instance, as I discovered this yesterday, Hong Kong is more open when it comes to international law. So they're more open to accept a will that was made for another jurisdiction, but there are countries that are not open at all. So if you have a will from another country, they just. All right, and then another thing that's very important to remember with US assets, if you have something over 60,000, I mean, I know it might sound like a lot of money now, but in the future, you might get there. So keep it under 60,000, because if you pass away having more than $60,000 in your name, whoever received that money, they will have to pay inheritance tax, and that can go up to 40%. So they're actually getting much less. And it doesn't matter whether you have any US assets of US types like the green card, or if they don't, it doesn't matter. So as long as you have more than 60,000, you're liable for the inheritance tax. So keep it under that threshold if you're not US citizen. Any questions about this? Okay. I think that's pretty much it. Yeah. So we have this other event happening next week. We're partnered with the Bank of East Asia for this one, and it will be about 2 hours, and they will talk about their Visa cards, how to apply for it, and also they do offer a service to make bank transfers from the app without going to the bank to do the conversion, which is like a big pain, right? So, and then also, of course, past the year, we'll be talking about investing, China, and VA for all stuff. Yeah, thank you. Thank you. Yeah, so I think all of you have my chat. Yeah, I think, yeah. Yeah, yeah. So anyway, if you have any questions. Like I just spoke investing this. So keep it under 60,000. So as long as it's under 60,000, your beneficiaries will get all of it. But so it also depends on what kind of contract. So property, stocks, mutual funds, ETFs that are based in last years. So when you're investing on the platform, you can choose where this ETF was ranked. So and usually they will tell you domicile. So for example, if you're looking at ETF and it starts with US, the number, the unique number that every ETF has, if it starts with US, then it's in US. Quite often, especially companies like BlackRock, they have several branches around. So that same iShares, they have ETFs that start with RP, which stands for Ireland, GB, Great Britain, LU, which is Luxembourg, and some other like PDS, like in Spanish, Spain. But so when you go, just stick to LU, GB, or I. So when you're looking for an ETF. And as long as you are under 60, that's fine. Just make sure you are very, very important. And then I think another thing is that many people don't provide that information to their family. Like if I'm investing, I don't tell my mom, I don't tell my mom. No one knows how much I'm investing. And actually, if I die, they don't know how much money I actually have. So you, when you when you set beneficiary, just tell them you don't need to tell how much, like to say okay, so or maybe prepare there are some PDF documents or checklist where you can write down which platform or which investment you're using and some basic information like account number, uh, and the name that's on the account, so that at least your family might keep something down. Because I think a lot of times uh, people, yeah, family don't even know about it. And then the platform is not giving and I know that, for example, well, I'm from Luxembourg, so my mom can't go to the bank and investment platforms. She can't make it work. But in different easier to set beneficiary, but also make sure that your family knows that you have that. And yeah, because they don't know about it. They're, yeah, growing, and then if we're talking like 10, 15 years, 20, it could be a very significant amount there. Wait, this is in just one person's name, bro. So it's all assets. So for instance, if you have several stocks that might, really go up in price. So that's why regular reviews are so important because some of them might just grow so much. And then and it includes all your assets, so overall wealth, including properties, ETF stocks, uh, cash in the bank, everything. So and then if that happens, then not all of it. There is this place where we have a lot of business with, Isle of Man. So there, the process of probate, as in, proving that uh, if the family is in the family, then going to confirming that yes, we are the family and we deserve to get that money from the deceased can take up to 8 months. So generally speaking, set up emergency account, emergency contact, and beneficiary certificate. Likely, that they're not. These are the Russian traditional. Actually, they're normally a little bit bigger. I like this smaller size.